Yeah, I could probably use that too. I done went live, but you're not on. You can't see. Yeah, I need my phone too. Let me get that phone too. Welcome, ladies and gentlemen, to the Ramon Preston Show. Welcome to the Ramon Preston Show. If you're coming on, please do me a favor. Hit the like button. Thank you. Hit the share button. Tag Lolly Dolly everybody and let them know. Prophet Ramon, the squad, as you hear in the background, and the Ramon Preston Show. We are live into his house in this beautiful Buckhead community of Atlanta on this beautiful Tuesday. This is the day that the Lord has made, and we're going to rejoice and be glad in it. So welcome to the Ramon Preston Show. Please do me a favor, if you would be so kind, very quickly, hit the like button, hit the share button, tag, text, tweet, inbox, DM somebody and let them know to join you today on the Ramon Preston Show. It's going to be a very interesting discussion that I am going to have with you. It's going to be very enlightening to you because there are some things that I want to share with you that I really want you to use, particularly before this year ends, so that you can really just be ahead of the curve with what many people economically are anticipating to happen in the upcoming year. So please do me a favor, hit the like button, share, tag somebody. And also, here's what I want you to do as well. I want you to drop the name of the city or the state or the country that you're watching us from. Who are you representing? Please drop the name of the city, the state, or the country that you're watching us from. While you're doing that, I want to say thank you to all of you who continue to consistently watch the show, listen to the content that I'm sharing, and for those of you that are really applying the principles to your life. Everything that I share with you on this show is a personal extension of and representation of who I am as a person and what I live by in my personal, my professional, and my financial life. And so I am always honored. I'm always grateful to have this opportunity to share information with you. So for those of you that are coming on, just in case you don't know, let me welcome you to the Ramon Preston Show. I am your host, Ramon Preston, and every Monday through Friday, we show up here at 12 o'clock noon, with the exception of a few minutes. But we show up here to share information with you that is designed to help you start, structure, and scale your businesses, your ministries, your income streams, and your wealth building dreams. And as I mentioned, everything that I share with you is a direct extension of my life and of our organization as a whole. This information comes out of the personal playbook that I use in my business, that I use in my personal finances, and the success that I have created. I like to share that information with my people, with my tribe, with my community, because I know what success has done for me. I know what financial freedom has done for me. I know what having a business that is actually growing and thriving has done for me and for my family and for my team, my staff, my squad, my community. And I want you to have that same feeling and that same experience, okay? So today I want to talk to you about something that I think is very misunderstood, because a lot of people don't really understand the whole idea behind assets and liabilities. And so I want to make sure that you understand what assets and liabilities mean to you and what you should actually do with that understanding. And I don't want you to wait until 2022. I don't want you to wait until some, miraculous thing happens in your life that you get the bag and now you're at a point to make that financial decision. No, you can start right here, right now. So what does this whole phrase of assets over liabilities mean to you? What does it mean to you? Well, it won't really mean much to you if you don't have an understanding of what assets and liabilities are. But here's the key. Even before you dig into the details of what assets and liabilities are and how they mean to you, there are other things that are taking place economically in your life right now that are actually unseen. There's a lot of stuff going on in the marketplace. There's a lot of stuff going on economically in this world that you don't even see with your natural eyes. Truth is, you don't even really see it when you look at your pay stub. You don't really see it when you look at your bank statement. You don't really see it when you look at some of the practical, natural things that you're doing, because a lot of these things that are taking place economically are hidden. As a matter of fact, some of you may have missed this memo, but just recently, I want you to hear me on this. Just recently, Dollar Tree, I think everybody familiar with Dollar Tree, okay? Just recently, Dollar Tree announced that they are raising their prices from $1 to $1.25. So, okay, traditionally, the Dollar Tree is known for $1, $1 products. So they just announced that they are literally hiking and spiking their prices from $1 to $1.25. Now, here's the critical component to this announcement, because the spokesperson for the Dollar Tree company, here's what they said. They said, we want to make it clear in no uncertain terms, and we are emphatic. We are like on point with this statement. Here's what the spokesperson said: that this spike from $1 to $1.25 in raising their price point is not because of inflation. Now, this is going to be a good study for you today, so you're going to have to follow me on this. So here's what Dollar Tree is saying. Dollar Tree is saying, yes, we're raising our prices for our dollar products, which is why we're named Dollar Tree. We're raising them from $1 to $1.25, okay? But the reason why we are raising these prices, here's what the Dollar Tree spokesperson said, is not because of inflation. I'm gonna get back to inflation, okay? They said it's not because of inflation. Now, first of all, when you are selling $1 products and you raise the price point of your $1 products to $1.25, just in case you don't do the math, this is, ladies and gentlemen, a 25% spike, a 25% hike. Okay, so just marinate on that spike for just a moment. So think about the bills that you're paying right now. What would happen if all of your bills went up 25%? So for example, if you are paying $1,000 in rent, or let's say if you're paying $2,000 in rent, well, for your rent to go up, if it's $2,000 a month or $1,000 a month, if it goes up 25%, that means your rent is going from $1,000 to $1,250. That would be the equivalent of this percentage of a spike in the price. So $1 to $1.25 is equivalent to you paying $1,000 in rent, and then next week your landlord calls you and say, hey, we're going from $1,000 a month for your rent to $1,250. That's how big of a spike, how much of a spike and price hike that is. But they're saying this spike is not because of inflation. Now, here's what the spokesperson also said. They said this financial change in the trajectory of their price point allows their company to offer a wide range of merchandise, including items that had been discontinued at the $1 level. So basically what they're saying is, and this is going to have a lot to do with what assets over liabilities mean to you, so I want you to stay with me on this. So they're saying that one of the reasons why this is a good shift for them in the price point of their products is because now they're able to offer products at $1.25 that had been discontinued at $1. And then the final statement that the spokesperson made was this. They said gross margins will also benefit, meaning that they're going to see a spike or hike in gross margins. They're going to see more money, right? Meaning that they will be able to, with this higher price point, offset freight. That means the trucks that travel to and fro, the distribution centers to get these products to their stores. It's going to offset the prices of freight. It's going to offset the prices of operating and other costs that have also gone up. So I want you to see something, because this has a lot to do with you understanding what assets over liabilities mean to you right here, right now, no matter where you are financially in your life, because you have to see these writings on the wall economically around you that most people in their day-to-day endeavors don't see. So basically what Dollar Tree is saying is they're going up at least 25% in the price point of their products that they provide, not because of inflation though, but because the cost of their goods and their services like freight, traveling, people bringing the goods to their stores, the operational costs and other costs to run their company have gone up. So because of the prices of the goods and services that are needed and necessary for them to sell $1 products, they have to go up. They're saying it's not inflation. Well, let's do some fact checks on that, because this is just a reflection of what's going on in every industry. I want you to understand that. So whether you are in nonprofit ministry, whether you are in banking, whether you are in real estate, whether you are in trucking, whether you are in landscaping, whether you are in the apparel business, whether you provide products, services, goods, services, intangible, tangible products and services, no matter what it is that you are a part of, even if you're not in business, if you're working for a business, all businesses economically are going through the same similar situations. We just don't necessarily see it because we're inside doing what we do in our activities and endeavors every day, and we don't really see the writing on the wall. It's kind of like when you go into your house, right? You're so used to walking in and out of your house all day, every day, you might not necessarily spot a nuance because you're used to seeing it. But an outsider can come in, and within a second or two of walking in your living room, they can spot something that you may have just gotten to the point that you're blinded to because you're used to seeing it, or you've gotten comfortable with it. Well, this is how this thing here called inflation works. So they're saying it's not because of inflation, okay? They're just a representation of every other industry, every other operation, every other system and infrastructure. They're just a representation of what they're all overwhelmingly going through, but they're just coming out to explain it because it's real obvious. I mean, you go from $1 to $1.25 and you call it the Dollar Tree, it's going to be obvious. So you have to come out, send a spokesperson, do good PR, do some good marketing so that you can continue to preserve the integrity of your sales. But let's just do some fact checks on this, okay? Because they say it's not because of inflation. That's what they say. They say it's not because of inflation. So let me give you a definition of what inflation is, and then you tell me if, in fact, what Dollar Tree and almost every other company in every other industry is doing is actually a result of or directly connected to and associated with inflation. So I'll give you the definition, and you could tell me in the comments, you could tell me however you want to tell me if, in fact, what we just explained that Dollar Tree is doing and what other companies and industries are doing, if in fact it is inflation. So what is inflation? Here it is. I'm gonna give you a good definition. Inflation, by definition, is the progressive increase in prices of goods and services. So you read that and tell me if that's what's happening with Dollar Tree. Just think about it for a moment. I'm giving you a class right here, live on this Tuesday, a noonday class. So they said they're going from $1 to $1.25 with all their products because some products that they wanted to offer at $1, they couldn't offer at $1, and so they discontinued them. But now when they go up to $1.25, they can actually offer those products, and going up is going to give them some leverage and some wiggle room with their gross margins, meaning that they'll have a little bit more money to afford the freight, however you call it, the trucks coming to and fro their distribution centers and their stores to bring the products. They can afford to pay salaries. They can afford to pay operational costs and other costs that are associated to running their business. They said, but please be clear, it is not because of inflation. However, the definition of inflation is what? The progressive increase in prices of goods and services. Now you may say, well, technically, it's not like they went from $1 to $1.03 and from $1.03 next year to $1.06, and then from $1.06 next year to $1.09. Okay, so you can challenge the idea of it being progressive, but guess what? Either way, they went from one price point to a higher price point, and even if it's not progressive, even if it's just immediate, it's still inflated. It's still inflation. Now, why is that important to you understanding what assets over liabilities should mean to you and what you need to do with that understanding? Here is why this is important. And I'll give myself as an example. There was a time in my life that I was financially illiterate, meaning that I understood what I wanted to do as an entrepreneur. I understood how I needed to get it done. And I understood that it was going to require me to make money, to have a certain quality of life, and to continue to increase my entrepreneurial endeavors, build a successful business, have financial freedom, et cetera, et cetera, et cetera, right? There was a time that I understood the basic fundamentals of that. But because I understood financial literacy intellectually, and I didn't understand financial literacy mathematically, I really missed the mark when it came to dollars and cents. And so what happened was I found myself making money, but not really being able to manage the money and multiply the money, or at least save and store the money to invest the money, not because I didn't know what I was doing with regard to my business, with regard to the products and services that I was selling. It wasn't because I didn't have a passion to be an entrepreneur. It's because, I'm gonna simplify it for you, I did not do the math. I was using a different calculator. And so when things like this become public knowledge of companies coming out saying, here are the things that we're doing, even though for PR purposes, public relation purposes, marketing purposes, they have to save face, and they can't just come out and say, oh, it's because of inflation and we're just responding to the market and to the economy and we have to be forced to just do A, B, and C. No, that's not a good PR move. That's not a good marketing play. So of course they're going to have to give a better, more sophisticated explanation as to why their price points are changing, okay? But all of us see this anyway, because there are certain things that we do in our day-to-day lives that we pay for to do those things, and the prices continue to go up. And these prices continue to go up even when our pay doesn't go up. Even when, if we're entrepreneurs and business owners, our services and product prices don't go up. But we see all these other prices go up. But because it's so subtle, or in other words, it's so progressive in nature, it's like a snail, we don't see it. And so once I started doing the math on these things, here is the first thing I realized. I realized that I didn't have a lack of investment issue. I had a lack of increase of income issue, because most of us have income issues, not investment issues. Most of us have income issues, not credit issues. Most of us have income issues, not debt issues. So truth is, if we can start fixing the income issue, think about it, we can then begin the process of fixing our investment issues, our credit issues, and our debt issues. So I had to learn how to become intelligent financially, not just with regard to information, but with regard to mathematics. And then once I started understanding the math behind economics, the math behind entrepreneurship, the math behind business, then it was a foundation that I could build my understanding on when it came to assets over liabilities. But assets over liabilities ain't really gonna make sense to anybody if you ain't got income coming in that you can manage in the first place. So the first issue is I gotta work on my income. I gotta work on figuring out how I can increase my income so I can make more money, so that I can learn to manage the more money I'm making, so that at some point when I'm ready to multiply that money, it makes it easier for me to transition into investing. Then my understanding of assets over liabilities is going to play a bigger and more important role. Because there's a whole lot of people right now, y'all know what I'm talking about. There are a whole lot of people out here using hashtags and using memes and posts and wearing shirts that say assets over liabilities. That's the thing right now. But the problem is we don't understand what we're saying mathematically, even if we understand what we're saying intellectually. So when you see this thing called inflation happening right before your eyes, or at least when you get to a point to where you realize that, oh my God, inflation is taking place and is starting to change, watch this, it's starting to change the landscape of my financial life. Because inflation is the progressive increase in prices of goods and services. Watch this, which means, this is what it means right here. It means, please catch this, and then we'll get into assets over liabilities. It means the value of my dollar is not worth today what it was worth yesterday. So if I have a dollar today, the value of that dollar today will not be worth the same it was worth yesterday. And the value of this dollar tomorrow is not going to be worth what it is valued at today. Let me give you another scenario. So let's say you have a dollar right here. And let's say you have a product that costs a dollar right here. Okay? So today, you could take this dollar and you could purchase this $1 product. I think we all understand that, right? So there's a dollar that you have. You went out there and worked to make a dollar. So now you take your dollar and you're saying, okay, I want to take my dollar and I want to go buy a product that they're saying costs a dollar. Here's how inflation works. Because tomorrow, just for the purpose of this example, guess what you do? You go out there and make another dollar. The problem is tomorrow, when you go over here to buy the product, you realize that the product is no longer a dollar. It's what? It's $1.25. Now what just happened? Well, from the surface, it just looks like, man, they done went up on their prices. Man, I can't believe that. But the problem is you haven't really paid attention to the dollar. So if you didn't pay attention to the dollar, that means you're not paying attention to you making money. You're not paying attention to the effort that you had to put in to make the money. You're not paying attention to the money that you're making and managing, which means that you probably never even get to multiplying the money. So even if you understand intellectually about assets over liabilities, you never even get to that point. That's why most people never even get to investing. And most people not only never get to investing, but most people don't even get to saving or storing money, managing money, to at some point multiply that money through investing. And statistics, studies, the data, the numbers don't lie. It proves over 76% of people in the United States of America don't even have $1,000 in their savings account. So that's about 8 out of 10 adults right now who out there making $1 don't even have 1,000 of those dollars saved or stored for an emergency. So they never even get to participating in assets over liabilities. They never even get to participating in investment vehicles and opportunities that can multiply their money. You know why? They don't even have money to manage or save, because over here, the products keep going up, but this over here, the dollar is not changing to them. But the truth is, when you understand how inflation works, you got $1 today, you bought $1 product today with that dollar. Tomorrow you got $1 and you go try to buy that same product, but now that product is $1.25. And the only thing you see is that, oh, the price of goods and services went up. But the truth is, not only did the price of goods and services go up, but the value of that $1 went down. How did the value of that $1 go down? Because I can't take that same dollar tomorrow and buy the same product with $1 that I bought yesterday. Now I got to add more money to this dollar to buy the same product. So the product price didn't just go up, but the value of the dollar just went down. So that means I've got to figure out ways to A, increase my income, right? I got to figure out ways to A, increase my income. You may have heard me say this 1,000 times. I'm going to say it 1,001 times. Why do I, most importantly, need to figure out ways to increase my income? Does anybody know why you need to figure out ways to increase your income? Does anybody know why you need to figure out ways to get the bag? Does anybody know why you need to figure out ways to make the moolah? Do you know why? If you know why, I want you to put it in the comments. Because if you followed me long enough, if you're studying me and what I'm teaching and educating my people on enough, you know why I'm saying that in order for you to win over inflation, in order for you to not only have an understanding, but have an advantage to utilize the idea of assets over liabilities, the only way it's going to benefit you is if you first, or A, increase your income. Why do you have to figure out ways to increase your income? Why do you have to figure out ways to get the bag? Why do you have to figure out ways to make the moolah, baby? Do you understand the words that are coming out of my mouth, dog? Do you feel me, sis? Please hear me and understand me. The reason why you need to figure out ways to do this is because your income is your #1 wealth building tool. So let's look at it this way. When you get into understanding assets and how to prioritize assets over liabilities, that is going to become your car. That's going to become your vehicle. But the only way you're going to be able to drive that vehicle is if you have a key to put into the ignition of that vehicle. The key that goes into the ignition of that vehicle is your income. So you take your income, use it as a key, put it into the vehicle of an asset, and as a result of that, it takes precedence or it wins over liabilities like inflation, like credit issues, like debt issues, like a lack of staff issues, like marketing issues, and all the other issues that we experience in our personal, professional, and financial lives. But it all stems from what? Income. It all stems from income. Now, I had to figure this out because I realized that even though I had a problem with debt, even though I had a problem with credit, even though I had a problem with getting business and marketing and sales and all that other stuff, I had to realize that my biggest problem was my income. And then once I started increasing my income, once I started getting the bag, once I started making the money, the moolah, baby, once I started doing that, then my intellectual understanding kicked in when it came to assets over liabilities. Because once you start increasing your income, right? Once you start increasing your income, this is where a lot of entrepreneurs miss it because they stay stuck on, let me just get some debt. They stay stuck on, let me just build my credit. They stay stuck on, let me just get a loan. All those things could be helpful. All those things could be beneficial, but you don't necessarily need debt, credit, or a loan to increase your income. You don't necessarily need debt, credit, or a loan to increase your income. All right? There are a lot of other things that you can use outside of debt, credit, and income. But back to my point. The moment I increased my income, now I could take my gross income, I could take my overall expenses, which could be salary, which could be staff, which could be marketing, systems, it could be a whole lot of stuff, right? Inventory. Once I took my gross income that I increased, and even my expenses may have increased because my gross income increased, but now I could take my net profits, right? And guess what I could do? I could put those net profits into things that could help me win over liabilities. This is where your intellectual and your mathematical understanding of assets over liabilities makes the most sense. So you see, it doesn't really make sense to you to be out here claiming, oh, I got assets over liabilities. Do you actually? Because the first asset is going to be the asset of the increase of your income. And once you continue to increase your income, gross income minus expenses, you will have this thing called net profit or free cash flow. So now I had to decide, what exactly do I do with my net profits? This is where your understanding of assets over liabilities is going to benefit you tremendously. So let's go over the assets and liabilities. All right, so what is an asset? I'm going to give you an easy definition for what an asset is. Now, you may have your own version of what an asset is. You may have your own version of what a liability is. But hey, Google it, YouTube it, Wikipedia it, Investopedia it, do whatever you got to do to find your version of a definition. But I'm going to tell you what, wealthy people, rich people, millionaires, financially free people view to be assets or liabilities. So what exactly is an asset? An asset is something that brings or flows money to you. I'm just giving you a simple definition of what an asset is. An asset is something that brings or flows money to you. So what is a liability? Of course, it's something that takes or flows money from you. Now, if you live by these definitions, which, by the way, everything that I'm sharing with you right now, I teach in my online training program, because we need to be educated, not just intellectually on these things, we need to be educated mathematically on these things. One of the greatest compliments I get from a lot of my students and from a lot of my coaching clients, one of the greatest compliments I get is they learn that business and entrepreneurship and economics and financial literacy is about math, not about intelligence. When I hear a student tell me that, or a client tell me that, and basically a lot of times I hear them say, oh my God, my biggest aha moment was I listened to you and I couldn't understand what you were saying when you kept saying you got to do the math, you got to know your numbers, you got to use your calculator. And then all of a sudden, boom, they have an aha moment. The light come on and they get it. They realize, oh my God, I have understood business and entrepreneurship and economics and financial literacy intelligently or intellectually, but I didn't understand it mathematically. I couldn't do the math. I didn't know my numbers. Once they get it, they got it. And once that happens, guess what? This is going to be a game changer for you. So think about all the stuff you say is an asset. How do you gauge if what you are calling an asset is an asset? Is it bringing or flowing money to you? So that means if you take $1 today and you put $1 into something, is that dollar producing a return? Is it flowing money to you? If it's not flowing money to you, it's not an asset. It's not an asset. It's a liability. Because if I'm putting my money in something and it's not flowing money, I'm not talking about if it has value or future value. I'm talking about, is it flowing money to me on a consistent basis? If it's not, it's a liability. It is not an asset. And so if you look at the balance sheet of your business, if you look at the balance sheet of your finances, and you put all your liabilities, all the things that are flowing money from you or taking money from you, and then you add all the things that are flowing money to you or taking or bringing money to you, if you have more things taking money from you than you do have things bringing money to you, that means you have liabilities over assets. You don't have assets over liabilities. And guess what? Once you figure this equation out, what's going to start happening is you're going to start taking the income that you are increasing in your life. You're going to pay your necessary expenses, and you're going to take the cash flow, the net profits, and you're going to start putting those net profits into things that bring or flow money to you, not things that take or flow money from you. So a lot of this stuff we put our money in, we call them assets, but they're not assets, even if they have a monetary value. But just because they have a monetary value doesn't make them an asset. What makes them an asset is that they're flowing money. They're bringing money to you. So if I cannot put $1 into this, and within 30 days, within 45 days, within 60 days, worst case scenario, within a quarter, 3-month period of me putting $1 into this, if that thing is not flowing money back to me, then that dollar was not put into an asset. It was put into a liability that may become an asset at some point if I sell it. But during the course of me holding it, it's not an asset because it's not flowing money to me based on this definition. Now, you may have a different definition, but trust me, I don't care how nice the thing is that you bought. I don't care how expensive the thing is that you bought. I don't care how valuable to you or to others or to the market is the thing that you bought. if the thing that you put your money in is not flowing money to you, and it's flowing money from you, it is not an asset. It is, my friend, a liability. So what do you have to do? You have to prioritize assets over liabilities. Now, let's think about what are actually assets that we can put our hard-earned money in. Well, let's establish a basis for what those things are. First of all, those things that we put our hard-earned money in need to be assets, right? They need to be things that flow, that bring money to us. So if they're not bringing or flowing money to us, we're not going to put our money into them, because we need a flow. And we need to make sure that when we assess the asset or the potential asset that can flow money or bring money to us, that the asset itself moves or flows at least as quick as inflation. So that means if inflation is moving, and I'm not even going to say that. Like, that's like a worst case scenario to say it moves and flows as quick as inflation. I don't even like that statement, because that's just ridiculous. No, it needs to move. It needs to move or flow faster than inflation, truthfully. Because however the speed is that inflation is moving, if you're just moving at the pace of inflation, so let's say inflation is averaging about 3% a year. Well, first of all, in my bank account, I'm not even getting a quarter of 1%. I'm not even getting a quarter of 1% in my bank account. Well, guess what? If I'm buying liabilities, if I'm putting my money in liabilities, things that ain't flowing no money to me, but I'm putting them in things that depreciate, whether it's cars, whether it's clothes, whether it's jewelry, whether it's things that might make me feel good and look good, but financially won't make me do good, then I'm already losing. I'm worse than having my money in a bank or just have it sitting under my bed. Because remember, this thing called inflation that's invisible, every time I make a dollar, what's happening to my dollar? The value of my dollar is going down. So depending on the speed at which inflation moves is going to determine how quick my money keeps going down and how quick products over here keep going up. So I've got to find assets or vehicles, things that flow or bring money to me, but they have to flow at a pace that moves quicker than inflation. Because if they're not moving as quick as inflation, the more I work, the harder I grind, the more money I get. If I'm just sitting it down and it's not netting me any return, then I'm actually losing money while trying to bust my behind to make money. Do you see the psychology behind this? If you don't get what I'm saying, you need to listen to this a couple times, because you got to figure this out. And so where can I put my money? So all of y'all right now that's saying, well, I'm going to just save my money. Yeah, I want you to save, because there's some psychology behind saving. But I don't look at saving money as saving money. I actually look at saving money as storing money. So it's like when you go get a storage, right? Because you relocating or you moving or you got too much stuff in your house and you ain't got no room. When you get a storage, are you going to get a savings for your furniture or storage for your furniture? You're going to get a storage. By the way, if you have any questions, I want you to drop the questions in the comments. Or if you have any comments, drop them in the comments. And if you know what I'm saying to you is true, And you need to really start honing in on educating yourself and becoming more financially literate, more business and entrepreneurial savvy. You want to learn about investing. You want to understand assets over liabilities and balance sheets and net worth and business valuations. If you want to learn these things, I want you to take advantage of our offer for our online training program. It's called the Blueprint Game Plan. It is a one-year program. We give you access to it for 1 year. You're going to learn everything about business, starting a holding company, structuring holding companies. You're going to learn about financial literacy. We got a comment on YouTube. Okay, let me see. Let me see if I can look at YouTube and see what some of the questions or comments are. But for those of you that are interested, we have an online training program. You can learn all of this. It's an on-demand, interactive, 24-hour-a-day, 7-day-a-week program called the Blueprint Game Plan. It's a business and financial training program. And we have packaged it as a 5-step wealth building system to show you what you need to do step by step to become financially free. It's my personal playbook. It's what I've done. It's what I teach all of my students, all of my clients, all of my family members and friends, anybody that want to listen to me. I'm teaching them the same thing that I use as my personal playbook. And guess what? Not only can you get access to that for 1 year, we have a 1-year business coaching program where I will coach you for a year to not only train you, but to walk with you through each step of the process so that you can become financially free. So all you have to do is look in the description, look in the comments. There's a number that you can text the word blueprint if you want access to the blueprint, or you can text the word coaching, because with our coaching program, we give you free access to the blueprint. You get free access to the blueprint with our 1-year coaching. You get free access to all of our quarterly events. We host quarterly workshop masterminds, 1-day events where you're going to be able to come in and we're going to train you on the nuts and bolts of business systems, executive corporate systems, financial systems, creative tax strategies, sales, marketing. It's absolutely amazing. And you are able to attend our weekly coaching calls. Every Monday at 5, we host weekly coaching calls. We assign all of our clients in our coaching program a personal coaching coordinator, which means you have somebody you can text, you can call, you can email, you can reach out to. They'll reach out to you to make sure that you're moving in the direction and at the pace that we have set out once we sign you up and onboard you in our coaching program. So if you want to take me up on that, I want you to do that. Let's see here. We have some questions or comments. Let's see here. Okay, we've got, let's see here. Saving as storing is a good way to look at it. That's true. It's not talked about enough in homes. That's one of the comments I see on YouTube. That's right. So saving is storing. So let's get back to my point. If you're going to be investing your money in assets, your free cash flow, because again, I'm telling you this. You're listening to me. You're hearing it from me. The people that I'm around are multimillionaires. We're being coached. Our company is a part of a coaching program, and that coaching program that we are being coached on is led by a billionaire. So the information that I get, in addition to the information I already have, is information that only wealthy people know. And a lot of the stuff that I teach in my coaching program, a lot of people that I'm around, they don't even really talk about it with regard to like holding companies and creative wealth building strategies that you can use your holding company to implement and execute. But guess what? I'm giving my people the game. So let's get back to my point. An asset is something that flows or brings money to you. So if you are figuring out ways to increase your income, once you pay your expenses, what are you going to do with the free cash flow? Well, what you want to do is you want to put that free cash flow into assets. I'm not saying you shouldn't save or store a certain dollar amount, because if you are fiscally responsible for yourself and for your family and for your business, you're going to always set some money aside, some free cash flow aside for an emergency or for things that you may have not planned or prepared for. Okay, you're going to always set some reserves aside. You want reserves for your own family. You want reserves for your business, for your organization. But once you put reserves aside that you say, okay, I'm not going to mess with that. I don't want to just go to zero. What are you going to do with that extra cash flow? Well, that extra net profit, that cash flow, you need to be reinvesting it, but you need to be reinvesting it in assets that flow and bring money to you. So your litmus test, your gauge should be this. If you got 1,000, well, I ain't gonna say 1,000 because that ain't really no money, but let's just say if you got 10, 15, 20,000 sitting aside, or maybe you got 40 or 50 or 60,000 sitting aside. Like, why don't you invest at least some of that money into assets? But the reason why you don't invest it in assets because you don't understand assets. You don't understand things that flow or bring money to you. And so you're waiting for the bubble to bust to find a piece of real estate. You're waiting for, crypto to blow up. You're waiting for Bitcoin to take, you're waiting for all this stuff. But the problem is some of these things that you can put money into, they're not going to flow or bring money to you every month or every quarter, right? So you may have value in that thing that you invested in, but you shouldn't even consider it an asset if it's not bringing or flowing money to you. Like, to me, it's ridiculous. So what is the first level that you should put your money in terms of an asset? I'm gonna tell you what it is. Yourself. Like, there is no way, I'm telling you, there is no way you should be sitting on thousands and thousands of dollars or tens of thousands of dollars. God knows if you're sitting on hundreds of thousands of dollars and you're not willing to invest that money or at least some of that money into yourself. What do you mean invested in yourself? I ain't talking about buying no clothes. I ain't talking about showing up with a Rolex or AP or something. I'm not talking about, getting a foreign car, going to buy a bigger house. Those are not assets, okay? Will it go up in value? It's not flowing money to you, okay? So if it's not flowing money to you, don't keep putting your money in stuff that ain't flowing money to you. See, this is how my wife and I were able to pivot financially and economically and professionally so quick and see an accelerated return within a few years. Like, think about it. My wife and I, we got married 18 years ago. See, my life is an open book. You can Google me. It is what it is. People who know me because I don't hold back. I don't lie. I don't fake. I'm not some internet guru that's trying to impress people to make people think I'm somebody I'm not. I'm not the kind of person who's on here trying to sell you information that I'm not living myself, okay? So here's my point. My wife and I got married 18 years ago. I'm just showing you how powerful this information and the math behind this information is. My wife and I got married 18 years ago. So 2003, we got married, right? So we started as a two-person team. She was a real estate agent. I was Mr. Fix-It. I know my way around houses. I got hammers, I got nails, I got saws, I got screws, I got pliers. I know my way around a house. She's the real estate professional. We were a two-person team, okay? So for the first couple years, we was grinding, we was struggling, we was trying to make it happen. Around 2006, the end of 6 going into 07, we got our first break. Bang! We started shifting. We started making some money. That took off to about 2014. When 2014 came, we saw another big bang. So each of these we went up. We went up financially. All right, we went up financially. Doesn't mean we didn't have some financial struggles, but what happened was once we hit 2014, we got stuck in this middle class mindset because we had a lot of intelligence, but we didn't have a lot of mathematics behind that intelligence. And so we got caught into this middle class trap. We were considered like upper middle class. You making 6 figures, you driving foreign cars, you living in a big old house sitting on acres. So you're doing good. The problem was we were putting a lot of our money in liabilities. We weren't putting our money in a lot of assets. Okay? So I got a Range Rover, she got a Mercedes, and there's nothing wrong with that because we paid to play, okay? We work hard, we enjoyed our life, we had a nice house, we traveled, our kids were taken care of, we took care of our families, we blessed our church, we blessed other churches, so we were doing a lot of good now. There's a lot of compromises we made at this level because we could have really been like driving foreigns, different foreigns every month. We could have had 4 or 5 houses if we wanted to. We could have been balling with designer clothes. We could have went out of control with it. So we were pretty conservative with it. But my point is, we were stuck in a class, in a mindset. And by the time 2017 came, we're talking about 2017, we were up now. We were into 6 figures, my wife and I both, right? But the problem was we were so heavy in liabilities and we were so light in assets because there were a lot of invisible things happening that we were not seeing mathematically. So we had information, but we didn't have a lot of mathematical intelligence. And so once 2017, I kind of got a revelation. God led us to move here to Buckhead. We relocated at the fourth quarter of 2017. We sat down and regrouped our whole life. At the beginning of 2018, we set out with real math. And that's when our whole lives changed. And so from 2018 to where we are right now, 2021, in 3.5 years, what my wife and I have been able to accomplish is all because of something as simple as making the conscious economic financial decision to not just be financially free, to not just be 100% out of debt, to not just be millionaires, to not just make sure that our family never has to struggle and they're going to always associate the Prestons with prosperity and blessings and plenty money and a lot of financial freedom and stability. But we made the conscious decision that we're going to take all of our free cash flow and we're going to put it in assets. We're going to put it in assets. And again, that doesn't mean just because we're in real estate, we put all our money in real estate. Now, why didn't we put all of our money in real estate? You know why? Because we needed to put money in ourselves. We had to put money in self. And guess what? To this day, my wife and I spend tens of thousands. I didn't say 10,000. We spend tens of thousands of dollars, literally tens of thousands of dollars, tens of thousands of dollars in ourself. So what are we investing in when we invest in ourselves? Well, we look at ourselves as assets. How am I an asset? Well, I am something that can cause money to flow to me. So for example, if I put $5,000 into myself, just show you how this works. Because see, some people don't do the math. This is why they never do this. If I invest $5,000 in myself to learn certain skill sets, to learn certain things, do you think within a 12-month period, I can make at least $500 from what I learn? I'm asking you a question. If I invest $5,000 into myself today, do you think if I get the right information, if I get the right training, if I get the right access and get in the right rooms for this $5,000, do you think I can make at least $500 every year moving forward from that $5,000? If you think I can, guess what I just did? I just created a return, a ROI of 10% on my $5,000. And I guarantee I can put $5,000 into myself to learn about business, to learn about finances, to learn about tax strategies, to learn about investing, to learn about anything that has to do with sales and marketing, I can put $5,000 into myself, and I guarantee I can make at least $500 every 12 months. If I make $500 within the first year, my return on my initial $5,000 investment is 10%, which means if I do that for 10 years, bare minimum, $500 a year off of what I spent $5,000 to learn, I'll get all my money back in 10 years. But the thing is, I'm the biggest asset because I can carry this for the rest of my life. So why would I put $5,000 into other investments and I didn't even put $5,000 into myself? It's ridiculous, because I know I can move quicker than inflation. And the truth is, if you invest in yourself like this, you can move quicker than some real estate. You can move quicker than Bitcoin. You can move, because you're not going to be up and down if you get the right information. So the first asset you should be putting your money in is yourself. It's crazy. I know people right now who don't know nothing about nothing when it comes to business, when it comes to sales, when it comes to marketing, when it comes to financial accounting. They don't know nothing of that, but they like, man, I'm going to take these 20 grand and put them in Bitcoin. Or I got to go find me a piece of property because I want to rent a property. And you just as goofy as all outdoors. And the truth is, you're not even being paid full time to run your business. You still got a job. So that means you don't know enough to even run your own business and make money from your business. But you finna go take all your hard-earned money and put it in something that's going to drag you out. And most likely it ain't even bringing money to you every 30 days. Come on, y'all. And this is the time that you need to focus on this. This is the time that you need to do this. Do not go into 2022. Because I'm telling y'all, not just as a coach, a consultant, a business and financial trainer, I'm saying this as a prophet to my people. Do not let this post-pandemic world economically bite you in the behind and you find yourself being drugged for the next 10 to 20 years of your life. Because there are going to be a lot of casualties economically. My heart goes out to everybody that lost their lives and the families that's suffering medically and in other areas from what has happened in this pandemic. But I'm telling y'all, we have not seen the tragedy and the travesty and the negative ramifications of what's going to happen to a lot of people economically. There are going to be a lot of economic casualties because people, they have intelligence and information, but they never did the math. Because the truth is, they didn't get the right information and they wasn't around the right people. So when it comes to assets over liabilities, you have to have an understanding of what that means to you. And more importantly, that means you should be investing in yourself. And then and I wouldn't stop investing in myself until I'm good enough. So here's your gauge. If you got free money, free cash flow, whether you working a job or running a business, you should start dumping all that money into yourself. You should start dumping all that money into yourself. Like I'm telling you, and I'm not lying. I know some people be lying when they say this. I spend tens of thousands of dollars. I can show you receipts. Tens of thousands of dollars every year into becoming a better version of me. I probably read in a good year. I think the best year that I've had, I might have read like maybe 77 books. Like that's like a real extremely good year. I read 77 books. Most of the time I might be reading 40 or 50. At least 40 or 50 books a year. That's easily like 5 or 6 books a month. I'll do that in my sleep. I could read a book in a day. I could just take like 5 hours out. I'm a killer book because I'm just a bookworm. I love to learn. This is my survival. Like my survival instinct is I gotta learn because I don't have no formal education. My parents were crackheads. I never had a pot to put it in or when to throw it out, and I'm not going back to none of the above. So I'm going to make sure by the grace of God, with his anointing, with his grace that's on me, and with my drive and determination to wake up every day and to become a better version of myself, I'm my biggest asset, and you are too. You cannot be around here so goofy that you don't even know how to make money in your own business. So if you're working a job and your business cannot afford to pay you a full-time salary, before you start investing in your business, you have to put that money in yourself. Your business is not a human. It's not your business fault. It's you don't know enough. And until you come to that realization, you do not understand what it means to have assets over liabilities, because you're still the liability even if your business becomes an asset. And you're not going to be able to invest in businesses, your business, or other investments. See, here's the thing, because I know what you're thinking. You probably one of those mentally lazy people where you like, oh, I'm going to invest in my business. I'm going to invest in other things. And I'm going to just sit back and just get the bag and make passive income and do nothing but just sit on the beach butt naked drinking margaritas. It's not going to happen. It ain't going to happen, bruh. It ain't going to happen, sis. You got to get your behind up and learn something. Educate yourself. That's why I'm an educator and trainer. And here's what's crazy about it. I didn't even want to start a one-year business coaching program. My wife and my team talked me into it. They did, because I didn't want to do that. Because I'm so busy running a real business and making money in my business and grinding and doing what I need to do to make sure that I continue to scale. I didn't want to have to turn into like this philosopher or this educator. Well, that's one of the reasons why our coaching program ends at the end of this month, at the end of December. So for those of you that are interested, if you want to get in on this, we have an online training program. It's called the Blueprint Game Plan. All you have to do is text. You could text the word blueprint to 404-478-7213. And literally, everything that I'm talking about, I teach in that program. We have a financial literacy program built into that. We teach you the ABCs of financial literacy. We teach you about accounting. We teach you about creative tax strategies. We teach you about assets, liabilities, balance sheets, net worth. We teach you about cash flow. We teach you creative cash flow strategies. We have a entrepreneurship and business ownership program in there. We teach you the Entrepreneur's Guide to Business. How do you go from being an entrepreneur or a hustler to an entrepreneur, and then an entrepreneur to a real business owner? How do you evaluate your business? How do you put business plans together? How do you start and structure a holding company? How do you build that holding company out? How do you use it to leverage your pre-tax revenue? How do you invest? We have an entire real estate investing program. We teach you how to take that free cash flow, reinvest it in yourself, reinvest it in your business, and then at some point you take that other free cash flow and invest it into income opportunities like real estate, so that your money can be backed by hard assets. We teach you about goal setting. We teach you about scheduling. We have workshops and masterminds that are built into this Blueprint Game Plan program to teach you about sales and marketing. We give you a script. We give you marketing strategies. I'm giving you the game. I'm giving you the game. This Blueprint is a $1,500 program. And the truth is, some of y'all should just invest $1,500. Like, if you can't get a 10% return of $150 back in a year from investing $1,500, then don't quit your day job. God dog. Just stay your behind where you at. Just stay broke. But if you really want to get to the next level, because I'm talking to people who want to go somewhere. I'm talking to people who want to win in life. I'm talking to people who want to exceed. So for those of you that are interested in it, I want you to text Blueprint to that number. And guess what? We're going to end our one-year business coaching program. So that means after December 31st, there will be no one-year business coaching program again. There will be no more one-year business coaching programs. We may have a 90-day program available, but you're going to be able to get it today and for the next few weeks for the same price for a year that you're going to have to pay to get it for 90 days when January comes. And so if you would like access to our coaching program, just text the word coaching to that number, and we'll be more than happy. We're going to give you the Blueprint for free. So that's a $1,500 program we give you for free. We give you access to our quarterly workshop masterminds for free VIP tickets. We give you access to our weekly coaching calls. We give you a coaching coordinator, somebody that you can stay in touch with. We kick your program off with a free initial one-on-one coaching session. You're going to sit down with me virtually or in person for about 2 hours, and we're going to walk you through the whole process of putting a game plan together for you, figuring out what structure you need in terms of a holding company, divisions, subsidiaries. We're going to figure out what type of systems and processes you need. We're going to look at your ideas. We're going to look at your products, your prices. We're going to make sure that you have a game plan for this year, and we're going to walk you step by step through the process. All you got to do is text Blueprint or Coaching to 404-478-7213. Man, I love y'all. I love y'all so much. I hope y'all can really feel my heart and the sincerity of what I mean when I say what I want to accomplish in helping my people. I know how it feels to be at a loss in life. I know how it feels to be hundreds of thousands of dollars in debt, because I was. I know what it feels like to be so inundated with credit card debt, with bills, with just drought and no exit strategy. I know what it is to have information and intelligence about business and finances and economics and entrepreneurship, but because I didn't have the math to go with it, because I never got enough information that took me deep enough, I couldn't get past certain hurdles. I kept hitting plateaus. I kept running into roadblocks. And the moment I flipped that switch and started just dumping information and intelligence and the right wealth building principles and practices into my life and started putting them into action, it changed my life. And so what people see me and my wife doing and where me and my wife are right now, let me tell y'all something. We've been doing this for 18 years, and 90% of what you see right now, if not almost 100% of what you see, probably 100% of what you see right now, is what we've decided to do within the last 3.5 years. So the first 15 years, it's not like we was in poverty. My wife and I have been making six figures. We've been living good. We've been driving foreign cars. We've been living in big houses. We've been traveling. We do so much stuff. Our lifestyle is so amazing. Most people don't even see half like all the stuff I show people on social media about me traveling and flying first class all the time and living it up. People have no clue how me and my wife live, how good life has been, and how amazing of an experience it's been. But the first 15 years wasn't nothing compared to what the last 3.5 years have been, just because we made certain mathematical tweaks to our finances, first to our minds, to our finances, to our business, and to every area of our lives. And that's why I'm sharing it with you. Everything I give y'all is my personal playbook. So I love y'all. I appreciate all of the comments. I see so many comments. I'm here on YouTube right now. I see so many amazing comments. I want to help you. So whatever we can do to help you, please reach out to us. Let us know. Text one of the words. And I just told all of our coaching clients yesterday on our coaching call, if you know, we started this 1-year business coaching program in April. So a lot of people, they're going to be ending their 1-year program in April. So you need to start thinking about what direction do you want to go in your business and in your life. And we have other opportunities available. We have a certification program. I'm going to be taking a lot of time in 2022 to really train people who want to be coaches and consultants in our business coaching and consulting certification program. So I'm going to be showing people how I coach, how I consult, how I train. I'm going to be showing you my process so that if you know you're called to be a coach and a consultant and a trainer and a speaker, but you just don't know how to do it, I'm going to provide that in our coaching and consulting certification program. And then I'm also going to be taking a lot of time working with our licensees. We have gotten all of our legal paperwork, our trademarks, everything that we needed for licensing, we've gotten it done and locked in stone. And so we're going to be offering a licensing program, which will be with training for those who literally want to buy a franchise. You want to buy a coaching and consulting and training business. And so as a licensee, not only am I going to be training you how to be a certified coach, consultant, and trainer, but as a licensee, guess what? You're going to have a legal right, a license to sell our blueprints. You're going to be able to use our curriculum, our material, our content. You're going to be able to host your own courses and classes. And you're going to be able to just take everything that I have and just repurpose it for your business. And you're going to be able to make a lot of money doing it because you don't have to reinvent the wheel. So that's the direction that we're going in 2022. And of course, just a few weeks ago, we launched a new business venture called RP Capital. RP Capital. And RP Capital is owned by me. It's our company. I'm the CEO of it and the president of it. But RP Capital is a multi-strategy real estate investment firm. And so our focus with RP Capital is value add acquisition. So we're using RP Capital to acquire real estate investment properties, value add acquisitions. RP Capital is going to be the asset management company, which means once we acquire these properties, we will manage the assets of those properties and of the relationships that we're going to build with other companies, investors, and partners that join us in some of those endeavors when we open them up to that. We're going to be focusing on strategic repositioning of some of these properties. I have a vision for real estate that I know God has given to me, and I'm going to make it happen. And we have just launched that venture. And so we're going to be spending a lot of time with business certifications, licensees, and a lot of amazing real estate endeavors with RP Capital. So I want y'all to stay a part of our community. Everything I learn and succeed in, I'm going to share with you. Even if I don't succeed in it, I'm going to share it with you. And we're here to help you. So love y'all. Have an amazing day. We'll see you tomorrow, same place, same time, right here on the Ramon Preston